Let me have a quick look at a trade for one of the guys.
Wait. Matron, take them away.
And a warm welcome to one and all. First time here, big fella, Scruff. And what I'm trying to do is put trading in the real world and hopefully show you a trick or two along the way. So that sounds good. Hit the subscribe button if you find value and we'll crack on. So what am I doing? Well, I'm actually looking at pound JPY. Now, I broke this down earlier for the guys. And I've just done an update on it, looking to sell it sort of for noon. It's 5 to 12 now, so it's coming into play. If you just pop up here, there it is there. Okay, so they know roughly what I'm looking for at this moment in time. Now this is quite a difficult trade because it's erratic. And what I mean by erratic is that the very high time frames, the dailies, the weeklies, the 4 hour, they're all over the place. So I'm concentrating on this. Now I'll just move these parameters out the way that I was putting on. My main theory is it's going to be short in the short term. So the first thing I need to know is, do I have a 10 pip target to get into this? Well, if that's 10 pips, I've easily got 10 pips down into this black line, which is the target point that I was looking for. And then we have this here, which is a stumbler, and this. So what I'm going to do is I'm going to measure this out. So if we look at an extension of this major move here, which is from there to there, that's showing me down to this, possibly down onto this level here. So that is the roadblock, this one. But I need some key entries for this. But I've also got to go out. So what I'm going to do is I'm going to put a series of orders in that are just set and forget down onto this, up to in and around it. Well, if 50% is my sort of go-to figure, which it is, there, I can stage this bad boy up to that. All right. So these are good key points of attraction there. But we're down here, and we also have this little bad boy here. So let me just move that fib down onto there, and then I'm going to tighten this up, which will become apparent in a second. There, that's my area. So that one there, that one there, and that one there. So what I've done is I've created some key levels of attraction, these here. I'm happy to buy or sell on any one of these down into this area. Okay. And if it goes wrong, I'm going to use these for it to roll up, because my belief is it's coming down. So let's have a look at the 15 minutes, see how this looks. Well, there it is there. Now it's looking a bit nicer. There's a 15 drive, the one that we just marked in, and you can see the rollover. So it's actually coming onto this now. Look at the 5 minute. It's pushing up. So we can put an order under, sort of count this back. 1, 2, 3, 4, 5. Sort of under here, there, there, and then down. So that's what we're going to do. So I'll just drop them orders in now while we're having a little look at what's going on. You never know, might even crack our 10 pips before we've even started. But let's see. So we're going to put an order there. I'm going to put an order above it. With the target into the same place. It's there. Oh, there it is. It's actually triggered in. So I'm going to put that order there. So I'm quite happy with that. And we'll put another order directly above that as well in case it spikes up and gives us something a bit nicer to play with. Happy days. Just drop that on to there. Drop that in. There we go. So that's the job. I do need to pop out, so I'm just going to let that crack on with itself. I'll be able to monitor it on my phone, but my orders are in. We'll see what will happen, and I'll talk to you when I get back later on this afternoon. Okay guys, I'm back from being traumatized with Wink. She decided that she wanted to go Christmas shopping, and let's just say she's happy and I'm traumatized. But I ended up in the pub. How good is that? So let's see if I was drowning my sorrows or whether or not this played out correctly. Now, I did this for big balls in the squad, so a little salute to you there, Finn. I can't realistically say something unless I'm going to back it up, and I guess that's my point of difference. You know, I'll put my head on the block. That's exactly what I've done here. Now, looking at it, yes, there's nothing on it, and I know there isn't any because I've been monitoring on my phone. I could actually go back to market with it, because here it's gone back to the levels I put in. Now, I get pulled all the time about my levels and one thing and another, but the levels that you see that are on my screen are all high level points of interest that have relevance in the market. They're not willy-washy. You know, it's not a case of just going, oh, well, I can see a top here, I'll just put a little zone on, because on a 5-minute chart, that means sod all. Absolutely nothing. I see them going down into a 15-minute. Oh, this is the perfect strategy. There's your supply zone on a 15-minute. Bollocks, right? Because of the amount of money that's involved on these charts, the small time frames hold nothing. Not a bean, you know. All they are just very small pulses, but they have very little relevance to the market. You want relevance in the turning point, you want to be looking at your hourlies, looking at your 4-hour, look at your daily. That is where the relevance is. Down on a 5-minute chart, it's a crapshoot. And if it's a crapshoot, you're gambling. And if you're gambling, you're going to lose. A bit like the cockless wonder up here. Because what's happening is, you think the lower you're in the chart, the more in tune you are with it. It's actually in the reverse. The more in tune with the market you are, the wider you want to be. You want to be looking at big pictures. And that's what you see on the trading. And it's why I can go, I think my record at the moment for days without a loss, I think is 127 if I remember rightly. Straight through, 127 days, no losers. Right? There are losing positions, but no losing days. Because I look at the day. The day is the big picture. And that's not off the top of my head, that's documented because I post my videos virtually every day. And the guys in the squad have seen it every day for the past 2 years. So they know, you know, because I post my results every day. Anyway, cut long story short, what have we done? You know, having a bit of a royal rant. I'm old, you see. You got to have a rant when you're old, you know. And it is funny, really, because there's a lot of imitators out there starting to do their videos the way I do them, you know, put little funny clips in and one thing and another. And sort of try and show it the way I show. But they can't, because they're not me. And it's likewise, I can't do the videos the way they do it, where they're all glossy and wonderful and everything. Because I'm no Steven Spielberg. Trust me, I'm not. But I'm a trader. I'd like to think I'm a bloody good one. So let's have a look, see what we've done. Well, I reckon that's not a bad return, considering it was all called well in advance of the trade. And I might have tomorrow off, because I don't need to go to market tomorrow. That's another thing. In fact, that's something we'll touch on just before I wind this up. The desire to trade sometimes far outweighs the reason to trade. What I mean by that, so many guys come to the market and they think they have to press the button as soon as they're in front of the screen. No, you don't. Trading is as much the homework, seeing what's going on, making an informed choice, and then going into market when the time is right, rather than sort of some of the complaints that I get. Oh, I went in the market and I lost 50 pips. And I'll break the chart down with them and I'll say, well, why did you go in? Well, I had to. No, you don't have to. You know, your job is to extract money from the market, not be in the market. Two different things. So if you've got to wait 4 hours to get your trade, you wait 4 hours to get your trade. Otherwise, what you're doing is you're putting yourself in a world of pain, certainly sitting in front of the freight train. And the problem with that is a lot can happen in 4 hours. You know, there could be a news announcement, there could be a sort of a market spike, a correction before it goes in your favor. And what you've done is you're basically putting yourself under trauma and stress when all you really had to do was go and have a cup of coffee and come back to it an hour later. Now that's the difference between a good trader and a gambler. Because if you think you have to be in the markets all the time, you're gambling. And then if you complain when you lose, you are definitely gambling. And I'll tell you for why. I see it all the time. Oh, the market moved against me. The broker did this. Oh, I was stopped out because I was hunted and all of this. It's unfair. It's terrible. No, it's just somebody doing their job better than you. If there's a news spike and you're taken out, well, that's not the broker's fault. It's your fault. You knew the news is coming, or at least you should have done. And you either put your stop in appropriate to take out the extra noise, or you don't trade the thing at all. It's that simple. You know. So is that good management, or is that gambling? Well, to me, it's gambling if you just go into the market willy-nilly without any thought. And the reason why I say if you lose and you're upset, you're gambling, it's because you didn't know how much the trade cost in the first place. And if you're unhappy with losing the money, then you never planned it. You should always be at peace with the market before you press the button. And if you can't be at peace, don't take the trade. It's that simple, because then you're doing this. You're doing a wing and a prayer. And that's the worst thing you can do in the market. I can go into the market, I can quite happily take 500 or 600 quid heat, and it won't affect me because there's not a lot of money in the grand scheme of things. And then what I get out on the other end, well, that's my reward for doing my job, because I look at stops and I look at profit completely separate. That's another thing that creates problems. If you're forcing the narrative of R&R, you must have 1 unit at risk for 3 units reward. Sounds great on paper, but in reality it doesn't work. It forces trades. Stop has one job: protect your account to fight another day. If you've got a wide stop and you can't afford it, you don't take that trade. The profit is your return on the investment, and that can be 10% of what you put on the table, 20%, or a monetary value of, well, I want 50 quid for this trade. Stop's got nothing to do with it, not a bean. And that's another difference between looking at it as a business and somebody who's just going for the narrative of what's on YouTube. Work trading is a big world, and there's a whole lot more to it than X marks the spot. And if you think there's a mechanical system out there that works and X marks the spot is the one, good luck with that one. I've been around a long time. I've never seen it. So anyway, almost got on a rant. Almost. I might buy some lights. Make all up here look blue and wonderful. No, I think I'll just have a coffee, because we all know Scruffy likes a coffee. So as always, guys, trade well, keep your risk managed. Above all, do what you love, and the money will follow. See you all in the next one.